If we think about organizations from an insurance perspective, cybersecurity is actually still a relatively new insurance product in the marketplace, and boards of directors are reading these articles. They're investing money in legal strategy from a policy and procedure standpoint. Generally, the CFO kind of approves all the stuff from the IT security standpoint, and then last but not least, we need some type of risk transfer solution, which is a cyber privacy and security product. So we're seeing a lot more of these cybersecurity professionals at the big kids table lately, and cyber and privacy insurance is getting a lot more attention now, first and foremost because it is generally a first-time buyer that we are working with, so you do not have the coverage, okay? But the coverage has actually been around for a long time. So Nick was alluding to 15 years. Actually, cyber and privacy has been around a little bit longer than that, really since the late 90s. It was designed as a third-party liability policy for network security and media liability type of claims. Since then, in kind of the evolving liabilities of cyber privacy and security exposures, these breach notice laws came out. So I'm sure many of you in the room have received some type of notification letter or some type of email that says, we had a breach, we're really sorry, but someone gained unauthorized access to our network. Your social security number or payment card information may have been taken, we're not sure. It's very generally usually a pretty vague letter, especially in Massachusetts actually, it's not very specific. But as a valued customer, we're going to offer you 1 year of free credit and identity monitoring. And if you have any questions, you can call a 1-800 number and speak to a robot. Sincerely, CEO of ABC Company. So as we've seen that, the coverage continues to evolve to actually offer a first-party type of component to cover breach response expenses. And the breach response expenses would be legal services, so having a breach coach like Rob guide you through the notification process, offering of the credit monitoring if you need to hire a forensics firm or engage any type of crisis management company. So as we see, state laws evolving with requiring WISPs and for on the IT security side with encryption and kind of this standardization, now we're in a spot too where the insurance products have actually evolved a lot as well. So that's just a little bit of a history and overview of some of the coverage, but it is designed as a first and third party coverage, okay? So if you think about most of the insurance that you purchase for your organization, they are third party liability type of policies, okay? So if you think about a general liability policy, someone slips and falls in your parking lot, they break their arm, they have damages or something like that, and they come after you for those damages or any type of financial harm. If you think about professional liability or directors and officers liability, those are third-party liability policies. But your cyber privacy and security policy is actually a blend of first-party and third-party coverage. And about 85% of the claims being paid today are on the first-party side. So again, when we're talking about first-party coverage, we're talking about the notification expenses to send notification to the affected individuals who the hackers may have gained unauthorized access to. We're talking about the offering of identity or credit monitoring, breach response costs, so any forensics or legal services, as well as crisis management services. So what's the cost to notify? So if you Google that right now, you might see numbers from $1 to $200 per record, okay? The actual physical notification, so the cost of the paper, the envelope, the stamp, runs insurance companies, now this is insurance companies' costs, about $1 to $2 per individual. If you buy it on the open market through a vendor, you're going to spend a little bit more than that. The credit monitoring is about $15 to $25 per person. So if you were to go online right now and sign up for credit monitoring, whether it's through your banking institution or you use a LifeLock, you're going to see a special $19.99 a month, or maybe you can sign up the family for $24.99 a month. The insurance companies actually get it for $15 to $25 per person per year. And the reason why they get such a good rate on it is they obviously have market penetration. So we have insurance policies that we issue, and throughout the thousands of breaches that insurance companies are handling on an annual basis, they're able to get approved rates. Now, the most interesting thing about credit or identity monitoring is actually the low take-up rate. So I'm not going to ask for a show of hands, but if you were to think the last time you got a notification letter in the mail, maybe it was from Target or Home Depot or one of those retailers, maybe it was TJX back in 2007, and the person who actually signed up for credit monitoring, there's actually irony in that, right? So you're getting a notification letter that says we had a breach, but we're going to give you 1 free year of credit monitoring or identity monitoring. And the first question on that application to sign up for that monitoring service is what? What's your social security number? So now we're giving more information to another vendor or another provider that we've maybe never worked with before, like Experian or Equifax or whoever it is. And guess what? They have breaches all the time. So that's why the take-up rate is relatively low. A lot of other people say too, as well, that the take-up rate is low because they may enroll in other identity monitoring type of services. Yes?
I mean, another irony of that is that one of the very few sort of real tangible things I've ever learned that you can do for yourself to protect your identity is to lock your credit reports so that nobody can get access to your credit report without you specifically authorizing it. But to monitor it, you have to unlock it.
Correct.
So if you've locked it down, maybe
right.
They can't do the monitoring. So that's like another.
Now, the reason why I've been saying credit and identity monitoring too is they're two different things, and I hope everyone understands that. The credit monitoring monitors your credit, while the identity monitoring is much more valuable, and that's where we get into identity theft and fraud and so on and so forth. That's what we see with a lot of the false tax returns and W-2 type of requests. So, average total cost of a breach today in the breach response space is $665,000. The average breach cost for a large company, so in this we use national account type of companies, so revenue over $500 million or $1 billion is roughly about $6 million. Claims defense, average cost to defend claims about $435,000, while average cost to defend a regulatory action is about $186,000. We don't break it down in the state of Massachusetts, but I can guarantee you it's higher than that. So these are national survey type of figures, but you know, when our previous AG was in office, she was very active in the regulatory space, hitting Mass Gen as well as a number of other organizations for fines and penalties or resolution agreements, as they're calling them now in the healthcare space, for breaches resulting in regulatory investigation, which results in defense, claims, fines and penalties, etc. Some of the settlements and judgments, average claim settlement is about $880,000, and average regulatory settlement is about $750,000. Okay, these sources are from Net Diligence. Net Diligence is an organization outside of Philadelphia. They work with a lot of insurance companies. This is actually real claim data, so the insurance companies are giving them this claim data, and they come out with an annual report. So, excellent information here. So, insurance coverage for cyber privacy and security risks. How does traditional insurance respond? So maybe your current agent or broker has talked to you about a lot of other types of insurance, and we all buy different types. So if you think about it as an individual, we buy, personal coverage, right, for our home, our auto, umbrella, our family, and then we step into the office and we have all these different types of coverages to buy, right? A lot of the coverage is either required by law through the banks, it's required by customers. But with cyber privacy and security liability, we actually see that most of these policies listed above, which are relatively standard coverages that an organization would purchase, do not cover cyber-related events. Now, if any coverage counsel is in the room, I'm sure that they would say different, because we have actually seen GL carriers pay cyber claims. A lot of people don't know this, but back in 2007, TJX did actually not buy cyber insurance. Their GL carrier purchased it and paid the claim. Okay, so they did not have cyber coverage at the time, but their GL carrier paid it. Now, since then, we've actually seen other GL carriers pay cyber claims. But now we have endorsements on general liability policies that state that they are not going to cover cyber-related events. These are exclusions. Now, the reason for that is there was never any underwriting or any intent to cover those type of exposures, but they have been covered through Coverage Counsel really finding a way to get coverage through the personal and advertising injury type of coverage extension on those policies. So what about property? So Rob and Nick mentioned paper. So is that tangible property? Potentially. One could argue that if someone were to steal paper, that potentially some of the expenses could be covered, but we've actually seen property carriers exclude those type of claims. CGL we talked about. Crime policies or fidelity bonds, whatever you want to call them, they cover money and securities. So they don't cover breach response expenses. They don't cover any defense for cyber and privacy related claims. D&O policies, so directors and officers liability. We've actually seen directors and officers liability claims get triggered from cyber events because of derivative suits being filed. We have actually never seen any D&O policies cover a cyber event. We have seen the aftermath of a D&O policy be triggered, but we actually haven't seen it coverage. And the errors and omissions or professional liability, same thing by the way, a lot of people confuse it. These cover third-party liability for your services to provide professional services to others for a fee. So no cyber coverage built in there. Now you can potentially add the cyber coverage to an E&O policy, but it depends on the industry. So in Nick's world, for IT-related companies and software companies, so on and so forth, it's very common to see professional liability and cyber liability on one policy form. But typically, if you look at lawyers' professional liability, it is not. So, as I mentioned before, there's really two main buckets when it comes to cyber and privacy insurance. The first-party breach response expenses. So this is kind of a little bit of a timetable as well. So I'll take you through that actually, because I think that would help. So breach occurs, whether it's a hacker, whether it's malware, whether it's the disgruntled employee, whether it's the nurse girlfriend and the hacker boyfriend, which we've seen a lot lately. So the nurse girlfriend will take information from the hospital, give it to the hacker boyfriend type of thing. We've seen a lot of that happen lately. The cost to hire a breach coach. You need guidance. When you have these breaches, a lot of people don't know that, if you have an organization based in Massachusetts, you deal with customers all over the country, potentially all over the world. There are 47 states that have notification requirements today. Okay, so if you have a breach in Massachusetts, you have to notify those Massachusetts residents, but you also have to notify any of the affected customers based on where they reside. Okay, and of course, the notification requirements are different depending on the state. So they're different in Connecticut. Like Connecticut's actually the first state to require credit monitoring or identity monitoring. They're the only state that requires that to date. Credit monitoring is not required by law. So depending on where the customer resides is how you have to, based on how you have to notify them. Couple things come into play. The structure of the letter as well as the timeliness of the letter. So you have to notify some as soon as practicable. Some say 30 days, some say 60 days. It depends on. So the cost to hire a breach coach and legal services to help guide you through that process is very important. One other thing that we're seeing on electronic breaches is we're seeing the use of forensic experts and computer experts as well. So this is something Nick's firm actually does. So what they will do, and actually what the breach coach will do, is the breach coach is actually going to hire the forensic expert on the insured's behalf. Okay? So when this breach occurs, you engage with that law firm to help to provide those breach response services to you. They will then hire the forensic expert on your behalf. The reason why they do that is to protect privilege. Okay? So we're utilizing forensic services a lot, and I will tell you that forensic services are very expensive, very similar to legal costs. So right off the bat, all we did was have an incident, whether it's big or small, and we're already really working with two highly expensive professional services organizations. The cost to notify individuals, we talked about, generally $1 to $2. The cost to provide credit monitoring to the affected individuals, of course the call center costs, as well as any public relations. So of course, breach occurs, something's on the news, it's in the Boston Globe, it's in some other news outlet, and we need to respond. So if you remember the TJX breach back, almost 10 years ago now, the CEO got on, did a YouTube video, was on their homepage. There was someone coaching them on the other end of that through a PR, crisis management type of firm. So we're seeing the engagement of those firms as well. Now, think about it from an insurance perspective. You're automatically thought when you buy insurance is, someone's suing me, I have liability. Nothing's happened yet. You haven't gotten a letter from anybody yet. You simply just had an event. Okay, so it's important to remember that the first party coverage, you simply just need to have some type of incident in order for this cover to be triggered. Now, there is additional first party coverage that you can also purchase. It's cyber business interruption and extra expense including data restoration. Okay, so during this time, let's say you're an online retailer. Okay, you have a breach in your website is shut down. You're shut down for 2 weeks in December before the holiday season. Do you think that would cause an income loss? Do you think that that could potentially cause extra expense? If the website is shut down and any data is deleted, destroyed, altered, the cost to recreate that data is the restoration expenses. So this is additional first-party coverage that you can purchase in tandem with cyber extortion. So people have heard the term ransomware. You really can't not hear it these days. But the clicking type of services, the serial clickers that Nick was talking about, one thing that the hackers, and he mentioned hackers are lazy too, he stole some of my lines today. Hackers are lazy, and that's why they've actually moved towards a lot of these ransomware attacks, because credit card information and healthcare information is still very valuable, but generally what they do is they have to sell that on the black market. So there's an eBay for hackers and bad guys, and what they do is they take that information and they post it on the black market. With ransomware, the payment's much quicker. So if I were to pose a threat on your network and basically the way they're doing it is they're encrypting data and then saying, hey, requesting a demand. So they're targeting businesses, they're targeting individuals, and they're saying, okay, Grandma Smith, who lives down the street, we're extorting you. We just crypto-locked all of your grandkids' pictures. Pay us $500, we'll give you the encryption key and you'll get all your pictures back. Even more to the effect on the corporate side, we're seeing large demands being requested from hackers, and companies are paying them. We actually had an organization on Monday pay $7,200 worth of Bitcoin to a hacking group. Okay. Now, the interesting thing, and I'm sure Nick would agree with me here, is it's actually very hard to trace these guys. So when they're requesting these funds, people automatically give them up because they rely so heavily on their electronics to run their businesses, and they rely on that data. But also what we're finding is people just try to keep things quiet. They just want to pay it and move on. But the issue with that is if you pay them once, you'll pay them a second time. So the thought is that with all these new trends is, Grandma Smith, who paid the $500 last month, we'll hit her up, 6 months from now, and she'll pay us $750 or she'll pay us $1,000. So we're seeing a lot of activity there. Good news is you can actually get coverage for that. Okay, so all of these are coverages in really a relatively standard cyber and privacy form today. Here are the third-party losses. Okay, failure to implement and maintain reasonable security measures. Okay, so that's patch management. So on Patch Tuesday, when they send their patch out and the IT guy's down in Disney with his kids next week for February vacation, they don't install the patch. we've actually seen those type of losses occur, and hackers can actually sense that. So negligence, employees making a mistake, forgetting to implement a patch, violation of privacy, breach of contract, defense and damages, any media or intellectual property type of claims. We've actually seen a lot of activity here, libel, slander, defamation, kind of an unrelated cyber coverage, but media coverage is actually built into cyber forms. Regulatory actions, including fines and penalties. We talked a little bit about that. Massachusetts, Connecticut, Vermont, California, Florida, we're seeing a lot of activity there from regulators, and what they're doing is they're actually really teaming up. AG actually stands for almost governor. So seeing a lot of activity there. Last but not least, PCI, fines and penalties and assessments. Rob talked a little bit about PCI. PCI actually stands for payment card industry. They create the DSS, the data security standards. A lot of people don't know this, but PCI is actually based here locally. They're in Wakefield. And they come up with these security standards for merchants, so anyone who accepts cards. So there's 4 levels of PCI compliance, 1, 2, 3, and 4, and the levels change and the security requirements change, the data security standards change based on how many transactions you do on an annual basis. So Home Depot and Target have much different requirements compared to the local bakery on the corner here. So something to talk about in this space is you're PCI compliant until you're not. So you can be doing everything right and still suffer PCI fines and penalties. And the fines and penalties come from the brands. So MasterCard, American Express, Visa, these are the guys who levy the fines and penalties. And why do they do that? Okay? So quickly, if you think about yourself as a consumer, right? You have 0 liability. So if someone steals my credit card today and goes to Best Buy and buys a new flat screen TV for $1,000, my bank is going to probably verify that type of thing with me. I'll say it's a fraudulent charge, and the $1,000 isn't going to come out of my checking account. The bank's actually going to suffer that loss. So what the banks have been doing for years is they've actually just been writing that off. It's the cost of them doing business. But what's happened is these data breaches from merchants and from healthcare organizations and all other industries, banks are saying enough is enough. So what they're doing is they're actually reporting all of these losses to the brands. So, and what's happening is the brands are finding a CPP, a common point of purchase. So they're able to say that, my card got stolen at the bakery on the corner, Rob's card got stolen, everyone's in this room's cards got stolen, and the common point of purchase was we all, at some point in time, bought a bagel and a cup of coffee from the bakery down the street. So what they do is they figure out that common point of purchase, and they actually go after the bakery, and they levy the fines and penalties from them. Now it can take some time, but what happens is all the banks kind of pool those losses together, and the brands will individually peck at that retailer and recoup those costs. The brands will get it back, and they'll distribute it to the banks. So that is PCI, fines and penalties. You could do a whole seminar on that, but in a quick 60 seconds, that's what it is. Out of all of the exposures that we've talked about in the last couple minutes, all my clients are concerned with that. If you're accepting payment cards, you're concerned with that because there's so many unknowns. So when we sit down with retailers and they say, what's the most important coverage we should buy? Notification's cheap. If you want to send out notification to 2 million customers, no problem. It's going to cost you a couple $1,000,000. The insurance is going to pick it up. PCI, fines and penalties. You can have a breach of 100,000 people, and you can find that you're getting PCI fines for millions of dollars, and it's a big loss. We actually have a client right now outside of Philadelphia who's getting PCI fines from Visa. Usually MasterCard's the first one to hit, and then Visa will come shortly after.
Charles, isn't another one that they just deduct out of the payment stream? It's not one of these where they actually affirmatively claim. They'll just deduct and force you to fight it.
Yeah, and basically what they'll do, there's kind of a long process, but what they'll make you do is they'll make you hire a PFI, which is a payment forensic investigator. They're assigned by PCI. There's a small group of firms that actually handle that. And they'll go in and audit you. So think of like the IRS knocking on your door, same type of situation. And the CEO of the company 2 weeks ago, when in the company in Philadelphia, what he said to me, he goes, "What if we don't pay the fine? What'll happen?" I'm like, that's not a good question to ask. They will shut you down. So if you don't want to accept credit cards for everyone coming in to buy lunch, then that's fine. Everyone's going to have to pay cash, but MasterCard has the ability to shut you down. So it's really an interesting stream. So as far as the insurance and some of the costs and the carriers, you'll see up here, you'll see Chubb, you'll see AIG. Everyone writes this stuff. 10 years ago, there was maybe 5, 6 carriers. Today, we have over 60 markets that we represent, okay? It is very much a buyer's market. Minimum premium start at $1,000. So if you're a company that does under $1 million in revenue, you're basically going to pay $1,000. It's probably going to be some of the cheapest insurance you purchase. We have clients that buy $1 million of coverage. We have clients that buy $200 million of coverage. The coverage is available. All of these carriers can participate on towers, as we call them. So, we have customers locally here that purchase $50, $60, $100 million worth of coverage, and you can have several of these carriers provide that cover for you. The tough thing, though, is I'll tell you, is none of these forms are standardized. Okay, so they all call the terms and conditions of the forms are all different. So the one thing I would tell you is that if you're working with your agent or broker, make sure that they can design this policy correctly for you. A lot of different forms, a lot of different exclusions out there. You need to understand what you're buying before you move forward with this. Don't leave the seminar an impulse purchase because you're concerned. Educate yourself, figure out how the policy works, how the vendors that are assigned, because it's important to make sure that that works for your structure in your incident response plan, in your WISP, because it can be different with each organization.